Okay, so if you're looking at the AI landscape right now, you're probably feeling one of two things. Either this incredible excitement or this deep, gnawing anxiety that you're missing out. But what if I told you the uncomfortable truth is that both of those feelings are a trap? In this explainer, we're going to dig past the headlines, past the hype, and find a much smarter way to think about this whole revolution. So, let me just ask you straight up. Are you feeling that classic fear of missing out, that FOMO, about AI stocks? Well, here's the first hard truth. That feeling, in and of itself, is your single biggest warning sign. It means you're moving with the crowd. And in the world of investing, the crowd is almost always dangerously late to the party. And that feeling leads us directly into our first big topic, the AI hype trap. You know, this sense of urgent excitement, it isn't new. In fact, if it feels kind of familiar, maybe even dangerously familiar, well, there's a very, very good reason for that. You've got to understand something fundamental about the market. It doesn't reward excitement. It punishes it. See, when everybody gets excited about the exact same thing at the exact same time, prices get pushed way, way beyond their actual rational value. Investing based on pure hype almost always ends with the people who arrived last getting seriously burned. So if you're getting that weird feeling of déjà vu, like you've seen this movie before, it's because you have. The pattern of regular investors piling headfirst into a hot new sector, absolutely convinced that this time it's different, is one of the oldest, most repeated stories in the history of the market. I mean, just look at this timeline, the late 90s dot-com boom, 2017 with the crypto craze, 2020 and the EV gold rush. In every single one of these cases, the technology was real. The innovation was absolutely legit. But the timing of the public excitement was just completely off the rails, leading to these massive bubbles that, you guessed it, eventually popped. And when they did, they wiped out fortunes for the people who bought in right at the peak. So the big question for all of us right now is, are we just watching a rerun with AI? This brings us to what I call the story stock problem. This is what happens when a company's story, its narrative, becomes way more powerful and influential than its actual financial numbers. And, we can't talk about this without addressing the elephant in the room. The biggest story stock of them all right now, NVIDIA. Look, when a single company becomes the automatic default answer to the question, how do I invest in AI? You know for a fact you're not early anymore. You're deep, deep into the hype cycle. And this highlights probably the most crucial distinction an investor has to make. NVIDIA is a fantastic company. No one is debating that. They have real innovation, dominant market share. They're incredible. But a great company and a great investment are two totally different things. A great investment has a rational price. It has a margin for error. Right now, NVIDIA stock is priced for absolute, flawless perfection. And that's not really investing. It's just betting that a perfect story never hits a single bump in the road. So here's the big pivot. While the crowd is chasing the story, what we call smart money is playing a completely different game. They aren't buying the headlines that pique attention. No, they're quietly buying the systems that make those headlines possible in the first place. And that's exactly where we're going. Instead of chasing the flashy apps and the cool stuff you see on the deck of the ship, we're going to go down into the engine room. We're going to look at the greasy, noisy, essential, and yeah, maybe kind of boring infrastructure that actually powers this entire revolution. Which, of course, leads to the big question, right? If not in the famous story stocks, where is this smart money actually flowing? Where are they putting their cash? Well, the smarter strategy really focuses on three non-negotiable pillars. You see, AI isn't some magical thing that lives in the cloud. It's a physical beast, built on a foundation of massive, resource-hungry infrastructure. We're talking about the actual data centers that house it, the energy grid that powers it, and the incredibly complex supply chain that builds its brain. So let's start with pillar one, data centers. And let's get real here. Forget this fluffy idea of the cloud. We're talking about gigantic, windowless industrial buildings. They need huge amounts of land, crazy powerful cooling systems just to stop them from melting down, and miles of fiber optic cables. Right now, demand is blowing past supply, and that creates these amazing opportunities in what most people would call boring businesses. The real estate investment trusts that own the physical land, the construction companies literally pouring the concrete, and the firms that make all the high-speed networking gear. Okay, pillar two. This is the one that for some reason almost everybody seems to forget. Energy. These AI models are just insanely thirsty for electricity. The amount of power it takes to train and run them is staggering, and our current power grid was just not built for this kind of explosive growth. A future with more AI but not more energy is a total fantasy. It's impossible. And that's why the really sharp investors are looking at energy producers and all the companies involved in modernizing our ancient grid. And finally, pillar three, the chip supply chain. It's so easy to just focus on the final product, that shiny branded GPU. But the pros? They look at all the layers underneath. Think about it. The companies that build the mind-bogglingly precise machines that actually print the circuits onto silicon, or the specialized firms that do nothing but test and package the finished chips, or the suppliers of the weird exotic materials needed to make them. These businesses are absolutely critical. And the best part is, they get paid no matter who wins the AI race, NVIDIA, AMD, or some brand new player. So, what does all this mean? It means we need to completely flip the script on how we think about this. It's all about reframing your entire approach, starting with the very first question you ask yourself. You see, most investors out there are asking what I think is the wrong question. They're asking, what's the next NVIDIA? This is a lottery ticket question. It's just a guess. It's all about trying to find the next hero, predict the future, and basically just get lucky. But what if we ask a much, much smarter question? A better question? What if we ask, what does every single AI company on the planet absolutely need to function? And boom, there it is. That's the whole game. The answer to that better question is always the same stuff we've been talking about. They all need power, they all need physical data centers, they all need cooling and networks, and they all need that deep, complex supply chain to build the chips. You invest in what is an absolute necessity, not in whatever popular narrative is trending this week. All right, let's bring this all home and tie it together with a really practical framework. It's a timeless analogy, and it's perfect here. It's all about selling picks and shovels during a gold rush. So what does this actually look like for you, for the average person? It means taking a much more disciplined, less frantic approach. Instead of gambling on one or two hot stocks, maybe you use diversified ETFs that cover these different infrastructure sectors. You invest a little bit consistently over time, dollar cost averaging, instead of trying to time the market perfectly. You accept that slower, compounding returns are how real wealth is built, not by trying to get rich overnight. It's about avoiding that lottery ticket mindset. And at the end of the day, it really all comes down to psychology. The emotional investor just rides the wave. They show up late, they buy on hype and euphoria, and then they sell in a panic when things get scary. The smart investor, they don't need all that validation. They move early, they move quietly. They're unemotional, investing in systems and necessities, often when nobody else is even paying attention. So, I'm going to leave you with this one last thought. The AI revolution is absolutely real. But if you want to be a successful investor through this era, you have to stop chasing the heroes who are digging for gold. Instead, start studying the quiet, boring, but indispensable businesses that are selling the picks, the shovels, the land, and the power. That is the uncomfortable, but ultimately the profitable truth.